All right, guys, it's great to see you all, and let me share my screen and let's get after it. I just want to go through things really quite rapidly today. We've got a lot of information to get through, and yeah, I'm looking forward to it. All right, let me share my screen. All right, everyone can see my screen, right? Okay, so today's webinar is the first in our 4 series of webinars where I'm going to be breaking down all the new fundamentals that you need to understand to design trading systems for crypto. I'm going to be doing a deep dive on momentum systems for crypto. I'm going to be showing you how I optimized and iterated my own personal trading system. And then the last webinar, I'm going to be showing the rules for my actual trading system, what I settled on, which was really quite a conservative trading system. You could go a lot more aggressive, but I wanted something that was conservative and robust, and it's performed very, very well. Amazingly well, actually. So already in 2021, I've made actual life-changing money from crypto in 2021. And so what I'd like to show you is how to make life-changing money from crypto in 2021 as well. And more than that, I'd like to show you how to cash out right at the perfect time. And this is even if you're starting from nothing, even if you don't know anything about blockchain, if you don't know which coins to buy. And I want to be able to do this in a systematic way without relying on luck, without relying on bullshit tips from idiots, and without having to go down, rabbit holes of research that can just consume your whole life. So this first webinar is about the unique advantages of crypto for wealth generation. Like, why trade crypto? Why not just, buy property, buy stocks, buy an ETF? And we've got to understand what makes these markets different than traditional markets if we're going to have an edge in them. So, simple question, why should you trade crypto assets? Why should you? There's plenty of disadvantages that are obvious. Why not just trade stocks? And, simple question deserves a simple answer. Stocks went up. The S&P 500 went up 527% in the last 12 years, and that's amazing. That is the best performance in a stock market in all of recorded human history. And here's a list of some of the coins that our systems owned this year, and you can see the best of them did 2,391% this year so far. Second best did 1,113%. In fact, the average coin did more than 500% this year. So that we're trading in. So 12 years of the strongest bull market in history, or 3 or 4 months of crypto. Like, these markets are just turbocharged, and we're going to understand why they do this and why they keep doing this. Now, everything we owned, virtually everything we owned, not quite, but virtually, beat 12 years of the strongest stock market in human history in a few months. And the next thing is, but aren't the bear markets bad? And yeah, they're really, really, really bad. They are like the worst bear markets of any market. But what if you could, with a high degree of reliability, mark tops, 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 and mark bottoms, bottoms, and bottoms? What if you could only trade these bull market phases? And if you could just stand aside for these bear market phases that are just truly awful? And what if you could get in right here when the bear market's ending? Right here where the bear market's ending? Right here where the bear market's ending? Now, this is what I've been able to do, both in testing and with real money. I was able to get in right at the perfect time, and so far so good. So far so good. So I'm going to show you how we did it, and there's a whole pile of new fundamentals to these markets that we really need to get a grip on. So at the heart of what we're doing is that because all the data is recorded in the blockchain, right? You transfer a coin from one address to another address. The time that it's transferred is recorded. So what we can do is some advanced heuristics on it. We can, if I know what date you bought it and I know what date you sold it, or if you haven't sold it, I can work out how much profit you made, right? So I can work out how much profit is being banked. I can work out things like how long the people who are banking profits have been holding their coins for. So I can see if it's long hands, people who've been holding their coins for 6 or 7 years, dumping out of the market after an incredible run, which is usually the end of a bull market. Or I can see if it's short-term traders who've held their coins for a couple of weeks being shaken out of their positions by a sharp drop, in which case that's usually a bottom. So because everything's encoded in the blockchain and everything is public, we can do an enormous amount of data mining, and we can learn stuff that's just impossible to find with regular markets. And there's many, many ways to do this, and we can confirm our findings in like 5 or 6 different ways. And it's very, very interesting and just a huge advance. So we can identify both long-term and short-term tops and bottoms every single time. And you know, if you know me as far as price action, chart reading, technical analysis goes, I'm always the guy who says that you should never try and pick tops. That picking tops is like a stupid thing to do. No one rings a bell when the top is in. No one ever knows. That's true when it comes to stock markets. And like, I don't know the first thing about tops and in terms of picking tops in the stock market. Like I thought the stock market had topped last year when the coronavirus hit. Like I thought stick a fork in it, that's done. We're starting a big bad recession. That's not the case, obviously. So I got that wrong. But in crypto markets, we have much, 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 much more data. And so we can pick tops and bottoms for the first time. And you can't do this in any other market. You can pick tops and bottoms in crypto, and you can't do it with stocks. It's a huge advantage. And since Bitcoin's only been around 10 years, but in 10 years, it's been through 6 boom bust cycles. And these signals, which I'm going to talk about today, they've picked the exact top within 3 days of every single top, and exactly the same for every single bottom well, we haven't finished the current bull market. So 6 tops and 5 bottoms so far. No false positives, no data mining weirdness. Like, you can just tell when the top is in now. So the implication of that is that it's possible to trade only during these parabolic bull markets. And these are like 100 times as strong as the strongest stock markets. And you can cash out at the perfect time, which is what I'm all about. So I know some of you don't like crypto. It's unregulated. It's the Wild West. The people who trade it are just dickwads sometimes. And if you could avoid the bear markets and trade only the bull markets and cash out right at the peak, will that change your mind? So where are we in terms of a big picture? This is this classic thing where, you know, no one notices it till it's coming on. And we're starting to, the smart money got in here. We're well past the smart money stage. The institutional investors are coming in here, and you can see that all the time. We've got Tesla coming in, we've got Square, we've got PayPal, we've got Visa and MasterCard. Institutional investors are coming in now. So this is roughly where we are. We've had a powerful bull run. We're a little bit overdue for this bear trap. And we've got this beautiful mania phase still to go. So this mania phase should end up with virtually everyone you know talking about crypto, with people saying new paradigm, it's never going to end. And the key phrase that you should be listening to, which we haven't heard yet, is this time it's different. Every time someone says this time it's different because blah, 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 you know they're full of shit, and that's the end. So where are we? We're somewhere either just before or just after this, and we've got this wonderful phase to go. And what I'd like to show you, and what I'm going to do and do alongside you, is make a shit ton of money, like millions and millions and millions of dollars, and I'm going to cash out right the fuck here. And I want you to do that with me too. And I want you to completely not even look at this for about 1.5 years until it does this, and then we'll jump right back in here and play the whole game again. And what a wonderful thing if we can pull it off, right? So we are in the early stages, and I'm going to show you why we're in the early stages later on, of one of the strongest bull markets in all of history. in anything. This is something that's on a par with Tulip bubble, South Sea bubble, makes the .com bubble look like, a pathetic joke. You only need one of these in a lifetime. You only need one. And this thing will happen fast. I very much doubt it'll be still going beyond March next year. I think it's going to be a fast and furious hell of a ride, and it's going to make fortunes, paper fortunes, and I'd like to show you how to turn that into a real fortune. So you might think that you missed the boat, and you might think that, fuck, I can't pay 60 grand for a Bitcoin. I've got to wait till it pulls back, and you couldn't possibly be more. And you're definitely wrong about that. And here's why. So in every single crypto bull market in history, and there's been a lot of them, there was like bull markets from like 10 cents up to 30 cents and then back down to 4 cents and up to $32 and then back down to $4. There's every single time, the majority of the gains have happened in the final month, and shit gets really crazy in the final month. And this is because of the unique properties of crypto assets. And they make blow-off tops happen 100% of the time. Now, if you know anything about price action, you'll know that there's two ways that bull markets end. They either end with a bang, like a 2017 crypto market, or they end with a whimper where they just run out of steam and just gradually roll over, like the 2007 stock market heading into the 2008 crash. The 2007-2008 crash model does not work with crypto. It cannot happen because of the supply constraints of crypto. So every single time we get a blow-off top in crypto, it's always happened. It's always going to happen again. So we can be alert for the properties of blow-off tops. So in 2014, we had 90% of the gains, and this is just in Bitcoin. Altcoins were way even more extreme than this. So in Bitcoin in 2014, we had 90% of the gains in 2014. And in 2017, 60% of the gains happened in Bitcoin in the last month. And in the final 2 weeks, altcoins went up an average of 220% after Bitcoin topped. So all of the money is really in that last month. And that last month is going to be a crazy, crazy stressful time. Your account's going to go parabolic. You're going to be making 100, 200, 300 grand a day. At that moment, when you start making hundreds of thousands of dollars a day, it's human nature to think, oh, I can quit my job and do this full time. It's going to last forever. And I'm not just going to be a comfortable, I've got my retirement saved, I'm going to be rich. And the moment you start thinking those idiotic thoughts, you're not going to want to sell and you're going to fuck it up. And look at how fast things decline after that frantic top. So picking the exact top is really, really, really important. So let's look at where we are now. Crypto markets, we know, end with a bang and not a whimper. This is the current Bitcoin chart. So in the last month, we had 10% gains, and we've had a 20% pullback since then. This cannot be a top. This is not what tops look like. This would require the crypto market to have totally changed its stripes. It's not a top. So I've got a couple of Binance accounts I've been trading with this system. We started with 70K. I pulled half the profits out on March 21. I posted to the list in real time. 420K in that account, 45K on that account. It's actually a pain in the ass to get money back out of crypto. It sucks. And my story is I've been a pro trader since 2007, and I've been able to grow my accounts. I've been able to pay for my living expenses. I've been able to, the most money I ever pulled out on my account was to pay for my wedding about 5 years ago. And it actually hurt to do that. And it hurts every year to pull out enough to pay my taxes. I guess my point is that I've been able to pull chunks of money out for things like my tax bill, but I've never actually gone and let's pull $500,000 out because that's too much money to be leaving in crypto. I've never done that before. And it's the single biggest withdrawal of my trading career. It's the first time I've withdrawn anything over 100K. And that's after 14 years of doing this full time. So, and I did this by following precisely and exactly the trading system I'm about to show you over the next week. If you know anything about me, you know that I'm evangelical about systematic trading. I don't trust my own opinions. I don't trust my own research, because I know that what happens is that as soon as I start doing the research into a coin and deciding, wow, I like this fucking coin, that's a fucking great story, before you know it, I've just convinced myself into whatever I was trying to convince myself. And, you know, I'm a sucker to convince myself into all kinds of awful shit. And so I want to get away from my own opinions. I want statistics to govern my my decisions, and I want systems to control my process. And what it does when systems are running my whole process is I don't have to think about it. I don't have to stress about it. You know, the last couple of weeks, my system has lost money, but it hasn't stressed me because I know that if the system loses a little bit more, it's probably going to switch me back into Bitcoin and stop trading altcoins. And I'll explain all this later on. And I don't really have to worry too much about it. It's all good as long as I keep following the system. So over the next week, I'll be teaching you every single thing I know about building trading systems for cryptos and showing you my personal system. And I want to show you from first principles how I derived the algorithm you're going to learn. So the first thing we're going to do today is discover how crypto markets are really different from traditional markets and how we can design systems to exploit those differences. And that's what we're doing. We're finding an edge in the marketplace and we are exploiting it ruthlessly. So I'll be showing you the evidence of how I tested it, optimized it, and gradually got the system better. I traded it with my own money live in front of my mentorship group. Every week we have a weekly call on Saturday morning and we go through it, and they're all recorded, and you can see what happened week by week and week by week. Yeah, my hope is that I'll convince you to abandon hope as an investment strategy. You know, to forget this idea that you just jump on Reddit or YouTube and get some coin tips. And then the most egregious and shithouse idea that's responsible for more pain than just about anything else is this idea that you should just buy your cryptos, stick them in a bag and forget about them and hold on. And I'm going to show you why that works really great for Bitcoin and it sucks for altcoin. And it's the critical thing that you guys are probably missing with your investment strategy. And as well as that, I'm going to show you a logical, data-driven approach to wealth generation. And I'm going to show you exactly, and I mean exactly, precisely how to tell when the shit's over. Because when it's over, it's going to fall by 80 to 90%, like it's always fallen from 80 to 90%. It does this every single time. So I'm going to show you how to cash out right at the tippy top and get back none of your profits. And more than that, you're not going to be that guy trading crypto through a brutal bear market. You know, crypto technical analysis trading works amazingly during a bull market, and then it just stops working in a bear market. Like you can take 10 trades and get 10 losers in a bear market. So I'm going to show you how to ride the bubble right to the top, how to cash out at the perfect time, drop the mic, walk away, ride off into the sunset. No bear markets. And we're not going to rely on any unscientific bullshit prediction nonsense. We're not going to do moon cycles, Elliott waves, Fibonacci, cycle dates, none of that shit, because it doesn't fucking work. That's why we're not going to do it, because it doesn't fucking work. And one more thing, you probably think that seeing I'm semi-famous for being a price action trader and a technical analysis guy, that's what the system is built around, and no. So I actually fucked myself trading cryptos in the last bull market, relying too much on technical analysis. I was forced to confront the reality that I'd fucked it up. And there's crucial differences, and crypto markets are so fast and so different in bull and bear phases that there's a better way than relying on technical analysis. And, you know, I'm a lifelong technical analysis guy. I've sold $1 million worth of technical analysis courses. I'm famous for being a technical analysis guy. What I'm going to show you today is so much better than technical analysis for crypto that I virtually abandoned technical analysis. So here's the plan. I'll be teaching this over 4 live webinars. Webinar 1, why are crypto markets different? Webinar 2, I'm going to show you how our system, which is a momentum system, works. Webinar 3, I'm going to show you how we optimize and improve that system and made it production ready from the sort of tinker toy system that I started with. And then webinar 4 is we're going to dive deep into the exact rules of my automated wealth creation engine, which is what I call it. So this is where our last sell signal happens. You go to cash right here, and this is where we rebought. At Bitcoin 4,800, I think 4,890 from memory. So I believe that we can do this again and again and again. sell out here, buy here, sell out at the eventual top, and rebuy once the bear market's over, and just avoid all of this butthurt. So we're gonna use this to avoid the 90% declines cryptos have in bear markets. And let's talk about what sort of trading approaches will work with crypto. So most trading approaches either don't translate well from traditional markets. Like, for example, mean reversion is a stupid idea in crypto markets. Actually, I won't go into the reasons for it, but it just doesn't work. And it works really, really well in currencies and stocks. So most trading approaches that people tell you to adopt require you to just, at some points, you've just got to accept that you're going to take an 80, 90% drawdown, and you've just got to suck that up and just stick it in your back pocket for 5 years and wait for it to come good. That's literally the approach that everyone tells you to take. And, you know, there's no shortage of motherfuckers giving you coin tips out there. Like, you could, and you know, mine are no better than anyone else's. Like that's retarded for me to say that I know better than all these blockchain experts. That's not true. I can give you coin tips too, but they're going to be just as shit as everyone else's. And if you'll notice one thing about everyone giving you coin tips, where there's a tip, there's a tap. You know, they're only telling you when to buy. No motherfucker's telling you when to sell, because they don't know. And that's what we've got to fix. If we're going to make this work, if we're going to capture the full amount of the gains, we've got to figure out how to get the fuck out at the right time. So let's look at the common approaches. And you know, going back in time, you should have bought Bitcoins. We have to go back. We have to buy Bitcoins. Like, that's not a trading strategy. You know, I've got a great friend who had his whole net wealth in Bitcoins right back from like 2011. And you know, I'm thrilled for him. He's like minted. He's got a fucking yacht and a beachfront house and all kinds of pussy now. And I'm happy for him, but I can't do what he did because I can't go back in time. So sure, the people who bought early got rich, but we're in 2021. And the thing I'd like to point out is that just because someone's been involved in crypto for 10 years doesn't mean they have any special powers of prediction. It just means they had an interesting hobby that worked out for them. That's great. Like, I'm happy for them. They're probably pretty smart, full credit to them, but it's just not relevant to predicting the next bull market. So if you see someone making a prediction about the price of any crypto in 2021, the first thing that you have to ask is, what's your track record of prediction success? And the first obvious question is, did you predict the 2018 bear market in advance? And did you predict the end of that bear market correctly? And not just like predict, not just like buy Bitcoin, and the stop clock is right twice a day. Like, none of the people making predictions are any fucking good at it. And so I've got this hedge fund trader, friend of our group called Laurent Benu, famous guy, and his famous quote is, "Unless you predicted the bear, why in fuck would you think you're qualified to predict the bull?" And let's look at a few of the more idiotic prediction monkeys. John McAfee, the antivirus guy, he's predicting 1 million Bitcoin by the end of 2020. He says he'll eat his dick if he's wrong. And, you know, he's been arrested. He's going to die in prison. He doesn't have any idea. Like, how would he know? So there's this other guy, Pomp, probably the biggest guy in the space. He says, buy Bitcoin. Like, he goes on CNBC and says, buy Bitcoin. Bitcoin goes up, buy Bitcoin. Bitcoin goes down, buy Bitcoin. All through 2018, buy Bitcoin, buy Bitcoin, buy Bitcoin. So here's 2019 price predictions. Bitcoin hits 100,000, it was $75.50. Ethereum hits 3,000, it was $140. Litecoin hits 2,500, it was 44. And Ripple hits $10, it was 20 cents. So probably the most famous prediction guy who crows loudly about his prediction ability is like wrong by a lot. And there's a whole industry of these Bitcoin predicting assholes, and they promise to get their crystal ball out and fucking help you. And really what they're trying to do is they're trying to solve the most unpleasant part of trading is not knowing what the future brings. So when these assholes get out their crystal ball and they tell you, oh, we'll get $1 million of Bitcoin by blah, what they're promising is to solve that emotional pain of not knowing what the future brings. And we're just, as human beings, we're just suckers for that line of bullshit. We really are. Like, I find myself sucking to it. You know, if someone puts up a prediction that agrees with what I think is going to happen, I'm like, yeah, that guy knows what he's talking about, but he doesn't. So what I did is I did some research, and I got some of the more notable predictions, and I looked at the date they published and the predicted price and how wrong they were. McAfee was predicted a million per Bitcoin in July 2019. He would, by the end of the year, he was extremely wrong. Morgan Creek Investments, who are one of the biggest hedge fund investors in the crypto space, he predicted 100,000 in December 2019. He was very wrong. Head of blockchain at Price Waterhouse, very wrong. Robert Schwertner, who's a big name influencer, he was very wrong. Andy Chung is head of operations at the fifth biggest crypto exchange. So he's like right in the trenches, moderately wrong. Poulin is the third biggest mining company. He was wrong. Standpoint Research, a big name blockchain research company, wrong. All these guys wrong. Data Dash, CEO of Blockstream. Blockstream is the company that sets the fucking rules for Bitcoin. If anyone's going to know, this guy should know, and he's wrong. Altcoin Daily, he's wrong. Arthur Hayes, he's a bit better. Like, admittedly, BitMEX and Arthur Hayes, these are real traders running a derivatives exchange, and they're actually not too bad. So out of all of the top people in the industry, Arthur Hayes and BitMEX Industries did pretty well, and these two guys were essentially correct. So out of 20 guys, we've got 2 who aren't too bad, who are the same guy really, and 2 who did pretty good. We're looking 10 to 20% of the best named predictions, the most capitalized, the most money, the most influence in the industry. Like BitMEX is like the third biggest exchange. They're worse than random. That's my point, is they're worse than random. The best and brightest minds in the industry, they live, eat, and breathe blockchain. They will die on this hill. Like, blockchain is the future of money. If you ask every single one of them, they will die on that hill. Fiat money is dead. We're taking over Bitcoin forever. They have no clue. So why would you listen to them? And the other sales pitch that comes out a lot is that insert random shitcoin, it's the new Bitcoin because of reasons. It used to be in 2017, it was one of these Bitcoins are the new Bitcoin. One of these shitcoins is the new Bitcoin because they've got privacy and Bitcoin isn't completely private, or because it's an ecosystem and you can run smart contracts on it, or because of, now we've got DeFi. Because of DeFi, it's going to be the new Bitcoin. Insert reasons. I think it's probably a good time to look at what I personally invested in. So my biggest holdings in 2017 were NEO, ICX, ZRX, TRX, OMG, and ETH. So I think it's probably a good idea to embarrass me and let's see how those things went. So let's start with ICX USD. If you have a particular favorite altcoin from the 2017 bull, can you just put it in the chat, please? And let's see how it went. So Simon Spall says you won't be embarrassed alone. Yeah, it was a hateful time. Excellent. All right, so let's look at ICX. Bitcoin topped at about here, and ICX went from, what was it, $2.16 up to $12, a 600% rise in 2 weeks, and I held it all the way through this and all the way down through there. Let's look at XLM. Seeing that's one from the chat. Okay, before I move on, what I want to point out is that if we fast forward in time, this is not just a situation where, if I just hang on until the next bull market, I'm going to get my money back. Look at this motherfucker. This fucking prick of a thing at $1.60. Everything else, it's never even close to where it was in 2017. And is this going to get up to here? The fuck it is. It's not. This is a fucking dead shitcoin. Okay, so let's look at XRP. So XRP went parabolic again in those final month because This always goes parabolic in the final 2 weeks. If you didn't get out right here, really, you gave back a lot of profit. And then look at where it was. It was $2.70-ish, and it's gotten to $1.70. It's still a long way behind its highs. So you imagine for 5 years you've been holding this fucker expecting it to come good, and it's sort of half come good, but you still haven't made your money back. Like, you're still not even close to where you were in 2017. So let's look at a few more from the chat. XLF. Same deal. Went from 10 cents up to 90 cents in the last 2 weeks. Always happens in the last 2 weeks. Shat itself, low, a long, slow, painful decline. And yeah, it's gone up. It's gone from 8 cents to 64 cents. That's an amazing return. You're still below where you were in 2017. And let's look at Litecoin. Oh, that's even worse. Like, look at this. This is from Joachim. It was all the way up here, and you're not even close. You're never going to get your money back off that coin. Like, it's actually trading below it was where it was in the start of the last bull market. Like this is a terrible, terrible thing. Okay, Chris has XHV. Well, was SHV around in that last bull market? XHV. Let's look at metrics. No, I think this one only started after the bear market. That's a nice looking chart. XEM from Simon Paul. Okay, so this is a rare one that's actually beat its old highs. Good for it. Michael Landau wants to re-emphasize that we aren't at all in that same old mania phase. Yeah, we're nowhere near it now. We're getting to that in 6 months' time. Okay, so we've got IOTA. We'll just do a couple more and then we'll move on. So you can see IOTA went manic and then we're back here. And so I guess Chris Hawkinson's got Nano. Let's make this the last one. Same deal. So we can see this. We can see this is happening again and again and again. And some of these really, really hurt me to talk about because I'm a semi-well-known professional trader and I've got a large following. And I FOMO'd in to these overhyped shit coins at the absolute zenith of the madness. And I got burned. And what I did is I bought 5 Bitcoins. I traded the 5 Bitcoins into about 12.5 Bitcoins inside a month. And I pulled out my 5 Bitcoins, put them in a Trezor, put it on my desk. It's still on my desk. And I thought in my head that, now I've cashed out my original 5 Bitcoins, that's safe. And so I thought I'd let it ride with the profits, and it was not so very smart. I was very, very stupid. Stupid I am. Read I should not. And it's important to understand that what actually happened there, where Bitcoin topped December 17, 2017, and then altcoins went parabolic after Bitcoin topped. This happens every single time. This also happens in traditional markets, just not to the same crazy degree. And it's been observed in stock markets since 1932 when Dow Jones, actually the Dow Jones back, the guy's first name was Dow and last name was Jones. He figured this out and he called it Dow theory. And you can Google Dow theory and it's called a Dow non-confirmation. And it's a very, very reliable way of picking end of bull market moves. So let's look in a bit more detail about how it went down. So Bitcoin topped here 18th of December, 2017. Altcoins took over and most of the popular ones tripled or more in about 2 weeks after Bitcoin topped. And at the absolute peak up here, I was buying all these like no-name shit coins like Mint and Redcoin and fucking like really egregious scam Dent, really egregious scam coins. And they were doubling inside a couple of days. So Bitcoin topped, and you can see that in the 2 weeks after that, all of these altcoins, this is Neo, which was the coin that I really liked, like legitimately liked. It went up 300% in the first 2 weeks of 2018, and it lost 99% of its value. And it's starting to recover now, but yeah, Neo is back at $100. Exactly so. And you might think correctly that I'm a dumbass for not selling, but if we look really closely, so the majority of these losses happen really, really fast. Like from here, you're 50% down inside a week, more than 50% down inside a week. Inside of 2 weeks, you're like 70, 80% down. Ryan, I would say that it depends how you define alt season. So if we define an alt season as when alts broadly outperform Bitcoin and Ethereum, which is how I define it, you will have many alt seasons before this bull market is over. If you define an alt season as when every alt goes parabolic and that's the end, then yeah, but there's better ways to pinpoint that, and I'll be getting to that. So I sold my Neo for $60 after it got to $200. That is not pro level investing. That is like poor performance. And I didn't make my money back. I wouldn't have made my money back just by holding. That's my point. So why does this happen? This happens because if you bought Neo at $200, when it gets to $200 in a couple of years' time, you're going to sell because people sell to get their money back. It's human nature, and this human thing where if we hold a losing coin or a losing stock for a long, long time, it hurts our feelings. The only thing that can fix those hurt feelings is us getting out with some pride. Oh, I got my money back. And so what happens is as soon as you see that number where you bought at, people hit the sell button, and this is what happens. And Simon Spall's like a deep in the game crypto guy. He says these were a roll call of his portfolio back in the day, and I thought they were the strongest, most promising. As stupid as it sounds, I thought they were blue chip alts. So let's compare that with Bitcoin. So that buy and hold strategy, the HODL, doesn't work at all with altcoins. Works like a motherfucker for Bitcoin. If you bought here, fine. 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 Bitcoin's a different animal than altcoins, and the confusing of the two has been the ruin of many a poor boy. And it fucked me, and it's gonna fuck you unless you smarten up about this. Okay, so I'm going to explain, why Bitcoin always comes good. So summarizing so far, so buy and hold doesn't work well for altcoins, but it does for Bitcoin if you can handle 85% declines. If you can handle that, buy and hold Bitcoin or dollar cost averaging, that's an easy, simple strategy that works over the long time. It will probably continue to work for Bitcoin. Following the predictions of big name gurus doesn't work at all. Like, I think we conclusively proved that. Altcoins that suffer big declines in a bear market, they struggle under the weight of bag holder selling pressure. And something that's very important to understand is that the best, fastest growing coins in this bull market are not the coins from the last bull market. And if you think about what are the hot coins now, DOT, Uni, Chainlink, Sushi, any of those type things, Terra, Luna, they were nowhere in the last bull market. And if you think of what are the hot coins in the last bull market, NEO, ICX, OMG, TRX, they're fucking nowhere in this bull market. And this is a phenomenon that we see in the stock market too. You know what was the top coin in the 2001 .com bubble? It was Cisco. Cisco was like the standout. AOL, Cisco, like they were just like the shit to own. Amazon was being traded, but it was considered a penny stock back then, and in the next 2007 bull market, the hot stocks were mining stocks. They weren't even .com stocks. And in our current bull market, the hot stocks aren't mining stocks, they're tech stocks, but a whole different set of tech stocks than the ones that were hot back then. So it's this that in stock investing, we call it the general fighting the last war fallacy. So you look at what the last war was like and you design a strategy for that, which is always wrong because the future and the past, they rhyme, but they don't repeat. So why are crypto markets different? Like why are they really different? And if we can understand this, we're much closer to solving the problem and figuring out some edges and then exploiting those edges. So user behavior is radically different for long-term held Bitcoin. Now, this is the one thing, if you take one thing away from today's presentation, know this. So this is getting a bit technical, but let's dive in. So this is the probability of a coin being sold within 14 days. So this is day 0. And it's got like a 75, nearly 80% chance of being sold in the first 2 weeks. So if you think about someone who funds a Bitcoin account for the first time, what are they going to do? They're going to go buy some drugs, they're going to buy an NFT, or they're going to put their money from Bitcoin into a pile of shitcoins, right? The odds are about 78% that that's going to happen within the next 2 weeks, right? Does that sound about right? If that coin hasn't moved for a month, it's probably only got a 10% chance of moving in the next 2 weeks, right? We're down here. If that coin reaches about here, statistically, it's very, very unlikely to move for the next like 5 years. So what this means is that we can isolate the behavior of these coins that have been moved recently. And these are the short-term traders. These are the guys who are like me, in and out of shit coins, buying and selling altcoins, cashing in, cashing out, actual traders. And these guys down here, if you think about the psychology of a guy who's held his Bitcoin for 1,000 days, for 1,500 days, he doesn't even check the price anymore. He's just holding. He's a very, very different animal. So because as coins age, they reach this crucial kink in the band, which happens about 155 days. We're going to see why this is important in a moment. The behavior is very, very different. So once a coin gets to here, it's probably going to stay here. So what this means is important to understand. So when BTC isn't spent quickly, they tend to get taken off the market. And so what does that mean? It means someone's sticking it in a Trezor and putting it on the desk like I did with mine. It means that a corporation is printing out their private key onto a cold storage paper wallet, cutting it in 4s and putting it in 4 different safes. It means that the money is not sitting on exchange, and it's like it's in someone's drawer, it's in someone's safe, it's like locked away off the market. So what does that mean? It means that it's generally, if someone wants to sell those coins, it's a pain in the ass for them. So they don't do it unless they're really sure. So this friction to actually selling. So if you think about what happens if you're a long-term guy who's held Bitcoin since 2011, you have to get your coins off your Trezor, you have to transfer them into an exchange, you have to sell at the exchange, which can be kind of stressful. You have to switch from tethers back to real money. You have to order a wire transfer from the exchange, and in busy times they get busy and they delay it. And it's generally a stressful and annoying and uncomfortable process. And it means that long-term sellers are not shaken out by the wiggles in price. So if you think about what the effect of that is, it's that in Bitcoin, we have a large percentage of people, actually 78% of the current long-term supply, is long-term traders. So 78% of guys barely even check the price, won't sell. No matter if Bitcoin dropped 30% tomorrow, they wouldn't sell. If you have a stock and it drops 30% tomorrow, half of the whole supply is going to sell. This is not the case with Bitcoin. 78% of the guys do not even check. And this is the big, big, big difference between crypto and other markets, is the friction. So what does that friction do? If you're not going to sell if the price drops, you're not a seller. So less selling and more buying means that the price is almost guaranteed at some point to go parabolic. It's not the same as the stock market. And this is the key difference that you have to understand. So long-term holders really don't want to do it until they're really and truly ready to sell. And it's exacerbated by this effect. Like if you sold your big stash of Bitcoins because they went up to $1,000 in 2014, you would have felt pretty clever for about a minute and then felt pretty stupid later on. And so Bitcoin users have been trained like dogs to know, oh, fuck, if I sell that one day, I'm going to regret it. I'm going to fucking regret selling my Bitcoins for 60. How stupid does it sound? If you sold your Bitcoins today, who thinks they'd regret selling their Bitcoins for $60,000 a Bitcoin? I think you probably, like in the chat, if you think, I think if I sold my Bitcoins for $60,000 each, I'd really, really regret that in the future. And everyone else feels that way. And because of that, I don't want to sell my Bitcoins. I don't. That's the way people think, because history's proven that shit's probably going to go crazy at some point. It's designed to go crazy. So long-term BTC holders are strong hands. We call that strong hands. So you want to, so because of the blockchain, we can pull out the data for weak hands and we can pull out the data for strong hands, and we can analyze them differently. Now, what do you think is going to happen when the strong hands, the guys who've held Bitcoin since $10, finally start selling? That's the end, right? That's the end. So a market is made up of two sides. There's buyers and sellers. I think that's fairly basic. So we have a decrease in selling pressure when these long-term coins come on the market. And let's look at the supply side. So for a start, this is pretty basic, but there's only 21 million Bitcoins which will ever be made. They're released on the market in a programmatical formula, and the amount that of Bitcoins that get released gets halved every few years, every 600. I think it's 630,000 blocks or something. The miners, they get Bitcoin as a reward for keeping the network up and running, and it's a beautiful, elegant situation. And the miners are the biggest amount of selling pressure in the market. And why are they the biggest selling pressure in the market? Electricity is expensive. They spend $1 million on electricity. They get X amount of Bitcoins. And they need to sell it to pay for their electricity bills. They need to keep the lights on. So miners consistently are the biggest selling pressure in the market. So we can get crucial clues about what's going on by looking at what the miners are doing, because all their addresses are public, because it's all on the blockchain. So we can figure out what the miners are. The second biggest group of whales in the market. We can work out what those motherfuckers are doing, and we can work out how that's going to influence the price. So mining is, in effect, converting electricity into Bitcoin. And this is a key difference between crypto and traditional markets. So this is very, very important to understand. So this blue dotted line is a line of how many Bitcoins are coming onto the market from miners. And you can see initially it was really easy to mine Bitcoins. You could turn on your Pentium 1 and mine 100 Bitcoins in a couple of days. And then it got harder and it got harder, and you can see the slope goes down. And what happens is if we superimpose the actual price over the Bitcoin supply that comes onto the market, this is called the stock to flow model. If you Google stock to flow model, this has tracked the Bitcoin price throughout its history, like right from the start, very, very closely. And you can see that it's tracking this current bull market very closely. And if it holds, then as stupid as it sounds, by like 2027, we're looking at $1 million a Bitcoin. I mean, it's hard for me to even comprehend that. Like, that's way beyond what I think is going to happen. But how the fuck would I know? I don't have a crystal ball. I'm an idiot. So supply goes down when the Bitcoin mining rewards halve. That's important to understand. So the amount of Bitcoins coming onto the market is always decreasing and decreasing and decreasing and decreasing. This controlled supply, this is the key to understanding Bitcoin's long-term perpetual rise. And so if this holds, and I'm not saying it will, it's just one model that's widely used. This is actually a valuation model from the gold world. They track gold prices with this particular valuation model. So new coins are always coming onto the market at a decreased rate. So what other factors are there? So if you forget your password, you're fucked. There's no reset password. Those coins are gone. And probably 3 million Bitcoin have been lost this way. People die with their private keys. They throw away old hard drives. They forget the password. And the other whales in the market are exchanges. So let's look at how many coins the exchanges have available to sell. So this is the percent balance on exchanges. And you can see that for most of its life, this yellow line, this orange line, is the Bitcoin exchange percentage. You can see right at this market low, the exchanges started selling, running low on Bitcoins. And we have a supply shock. The most people, the biggest sellers are the exchanges to new people who are funding their accounts. Like, I've joined Coinbase, I want to buy, give me $10 worth of Bitcoin. And the exchanges are running out. They are running out of supply to sell. Less Bitcoins to sell, less selling pressure, coupled with increased buying pressure. This is why the price is going up. This is probably the biggest factor in the boom market. Now, anti-money laundering laws are pretty strict, especially in America. And it's a pain in the ass to get your money into crypto. You got to fill out a bunch of forms. It's a pain in the ass to get it back out. And so this friction makes bull markets stronger, and it makes bear markets stronger. So I love this quote from Nassim Taleb. So the market is like a large movie theater with a small door. And the best way to detect a sucker is to see if his focus is on the size of the theater rather than the size of the door. And you can see it very clearly. There's this supposed multi-trillion-dollar market cap, but that can vanish very quickly because the size of the door is very small. You know, when this game stops, when the music stops and everyone's going to run to cash, that door is way too small for everyone to cash out. So in crypto, the market cap is the size of the theater, and the liquidity is the size of the door. And in a panic situation, everyone becomes highly predictable and massive moves happen. So one more factor is the stable coins. So stable coins like Tether, USD coin, all those things, they allow non-real money exchanges to function. For example, you can't swap Bitcoin for US dollar at Binance, which is the largest exchange, but you can swap it for USD tethers. A tether is a fake US dollar that's like a pretend dollar. And so this is an abstraction that people think about. A question from Stu: isn't declining supply on exchanges a result of increased demand, not a cause? It's both. It is both. It's a positive feedback loop. So in effect, tethers get printed out of thin air, just like the Federal Reserve prints US dollars, which is kind of ironic considering the whole reason for Bitcoin existing is because you can't print more of them, but you can print tethers. And the same way that money printing makes stock markets go up, we've seen that indisputably, tether printing makes crypto markets go up. And so this is what's called the stable coin supply ratio. So it's a ratio of the amount of tether printing, effectively tether printing, but other stable coins as well. And we can see three distinct modes. Lower values means more stable coin printing. And you can see that while there wasn't as much stable coin printing, this bear market just ran rampant. In this transitional market, we had slow stable coin growth. And then you can see when the exchanges finally got the shits with the bear market and started printing tethers, that's what really kicked it off. So are crypto markets manipulated? Oh, yeah, they are. Oh, fuck yeah, they are. Is that wrong or right? Who gives a fuck? But what's important to know is that it's totally legal to trade alongside the guys doing the manipulation. And that's what I want to do. If I see this stop, I'll probably think that the music's pretty close to stopping. So let's look at this again. A lower ratio means more tethers printed. And you can see that exact moment they started kicking this into overdrive right here was when the market actually kicked into overdrive too. So to summarize so far, we've got friction getting money in and out. We've got exchanges and whales dominating the market. We've got stablecoin printing being completely unregulated manipulation. And the long-term holder behavior is very, very different. So we've got a supply shock and a demand shock together, like smashing. And where's the demand shock? The demand shock comes from our three groups of traders. We've got retail, we've got corporations, and we've got Wall Street. So let's look at them in detail. So this yellow line, this orange line, is the number of addresses with a non-zero balance. So this is money. This is addresses that have actually got money. So you can see that aside from the little wiggle here, which marked the end of the last one, we haven't got that here. And we've got demand very, very strong. Money keeps piling in. New money is coming in at an increased rate. And this fits with what we all know. I think everyone here has got friends who are funding their first Bitcoin accounts right now, or they've done it themselves. So like it's pretty fucking obvious that people are piling money into crypto. And let's zoom in a little bit. And you can see, even as the price went down quite dramatically the last couple of weeks, oh fuck, money still, even as the price dropped, money keeps flowing in. And I think this is really, really important. So we've got the institutional money that's piling in as well. We've got BlackRock, MicroStrategy, Tesla's got a couple of $1 billion worth of Bitcoins. PayPal's in the game. Visa's made announcements that you can settle in crypto. These are some of the big treasuries. We've got Square, Tesla, MicroStrategy, Coinbase, Galaxy, big corporations with multi-billion-dollar investments in Bitcoin. So this is one sort of a demand shock. Bitcoin is finally legitimate enough that a big company can hold it on its balance sheet. Now, the final factor is the Wall Street pigs finally getting their noses in the trough. So we've got, amongst other things, there's a lot of it, but the biggest one is the Grayscale Etf. So this year alone, this is the growth in the Grayscale Etf. They've bought 650,000 Bitcoins this year alone. So there's only 21 million Bitcoins. These motherfuckers bought 650,000 of them this year. So everyone else who wants a Bitcoin, including all those new retail guys, they have to compete with this diminished supply. So we've got diminished supply on exchanges. We've got increased demand from retail. We've got Tesla stacking up their treasuries with Bitcoins that they say they're never going to sell. And we've got these Wall Street motherfuckers taking 650,000 coins off the market. All of those things together say decreased supply, increased demand. The fuck do you think's going to happen? Exactly what is happening. So, who came here today thinking that there was no fundamentals to crypto, that it was all just like, yeah, it works, but it's like an abstraction. It's just like, you still think there's no fundamentals? Because I think there's really, really fundamentals here. Like, I think there's shit that we can really run with. All right, so let's divide our supply into three buckets. We've got illiquid supply, which is supply in cold storage that hasn't moved in a long time. We've got reasonably liquid supply, and we've got highly liquid supply. Highly liquid is the stuff that's going to be sold today or tomorrow in the next couple of weeks or whatever. So red is highly liquid. You can see that illiquid supply, which is the blue thing, is growing faster than anything. Now, what that tells us is that people are buying their Bitcoins, putting them off exchanges, and they're just sitting on them. Everyone's sitting on them off exchanges. And you can see that in 2021, the biggest growth has been in illiquid supply. So not only is there demand coming onto the market, but people are taking their coins off the market and saying, this is a lifetime asset, this is a legacy asset, I'm never going to sell it, I'm just putting it in the back pocket. Now I've got 2% of my wealth in Bitcoins, and fuck it, I'm good. If Bitcoin goes to $1 trillion, I'll get part of that, right? Yes, it is. Coins greater than 155 days, actually, cool. So 78% of the available supply is now liquid. 78%. So if you want to buy a Bitcoin, you have to compete with everyone else who's coming onto the market, hearing about Bitcoin, wanting to buy their first Bitcoins. You have to compete with those guys. So the implications are important. Illiquid coins never get stop losses triggered because they're not on the market. A 50% single day drop doesn't shake those guys out of the market. They just wait for it to come good. And the corollary is true too. In regular stock markets, a stock goes up 20% in a day, everyone starts selling. This is not true with crypto because they can't sell because they're illiquid supply. They don't sell just because they've made 20%, and making 20% isn't that interesting to them because they've got this track history of making thousands of percent. So it really takes something extraordinary for people to start selling crypto once it's illiquid. And so because of that, it becomes very, very obvious when it starts to happen. And it becomes very, very obvious when it's time to sell, because all of those illiquid coins, all of those strongholders, when they sell, you want to sell too, period. So when this illiquid supply actually sells, that's when it's over. You know, this shit is sex with a gorilla, man. You know, sex with a gorilla, it's not over because you said it's over. It's over when the fucking gorilla says it's over. And you know, thanks to these new fundamentals, we can really monitor that. So I hope I've changed your mind about that. And I want you to understand that this bull market isn't random. It's not lucky. Well, it is manipulated, but it's kicked off by the intersection of decreasing supply and increasing demand, which we covered today. The rising prices attract new buyers. The new buyers cause the price to rise faster. They tell their buddies about how much money they've made, and they also buy, which increases demand. People start making money, so they become less likely to sell because they love their fucking crypto. I can't sell my crypto, sell my car before I sell my crypto. You know, and it becomes this vicious positive feedback loop where gains beget more buyers, which cause more gains, which cause the shit to eventually go vertical, and then it's going to be over. It's a vicious positive feedback loop, which can only end one way. And how's it going to end? It's going to end in a stunningly powerful blow-off-top climax for the record books. What do we know about Bitcoin? We know that in the 6 bull markets in its lifetime, every single one of them's ended in a blow-off top. We also know that every single blow-off top has been more powerful and a greater monetary value than the previous top by an order of magnitude. We know this. And we know this for the reasons that keep coming up again. Supply keeps reducing, the miners get less and less and less, and so there's more and more demand. So what can we expect? We can expect a parabolic top like this last one in 2017, this last one in 2014, this last one in 2012, somewhere around here. Somewhere, worst case scenario, 200K, probably median 300K, best case 400K-ish. Like, those are some pretty crazy numbers. This is from a blockchain scientist called Willy Woo, who's probably the best blockchain analyst guy. I'd encourage you to follow him. This is called his top cap model, by the way. So if this top cap model holds, and I'm not saying it will, but I think it seems like it's on track, we're holding for between 200 to 400 Ks in early 2022. And I would be very surprised if it made it to the end of 22. So my plan, I'm going to ride this fucker all the way to the beach, and I'm going to jump out somewhere around there. And buckle up, guys. We're going to make some serious fucking money this year. And this will require a little bit of work, but the last month is going to be crazy. And you've got to listen to me when we finally see the signs that this shit is over. You've got to run at that point. You can't fuck around and give it another week. You just got to swallow your nose. So the next webinar, we're going to start working on our momentum trading system from first principles. And I want you to have a really, really deep understanding of momentum, how it works, why the edge is real. I'm going to show you a lot of data, and we're going to get super technical. So the next webinar is going to be later on this week. I haven't set the time yet, but if you're on my email list, which all of you are, I'll be sending out information, and I'll see you at the next webinar.